This conference will now be recorded.
Hello and welcome to the SIA Wealth Portfolio Update for June of 2024. My name is Colin Szynski, Portfolio Manager at SIA Wealth Management. A little bit about me. I've been working in the investment industry for 32 years. My experience I think I'm best known as an analyst and strategist covering equities, currencies, and commodities. However, I also have quite a bit of experience with portfolios as well. I spent 8 years working as an investment advisor directly with individual clients. I've also spent 10 years working as an educator with traders, particularly in the area of risk management and managing risk in portfolios in highly leveraged foreign exchange trading. For the last 6 years, I've been working with SIA Wealth Management, and for the last 5 years of that, I've been working with the portfolio management team, both as an assistant portfolio manager and also working in research and development. So I'm quite familiar with the portfolios and their performance, and SIA Wealth's approach to trading and investing. I thought we'd start off with we've had a really good month here at SIA Wealth Management, particularly with the portfolios that we sub-advise for BMO Global Asset Management, and we've put up some very strong year-to-date performances as well as performance for May. And so I'd start with the BMO SIA focused North American Equity Fund that we have the results here for the F class, and of course this is the ETF class is ZFN on Toronto. We had a really good month. We were first percentile in our in the equity category, and also first percentile year to date on the 1 year, 3 year, and 5 year. Sorry, 1 year and 3 year we're top decile, and 5 year we are top quartile. Looking at our metrics relative to the group, we feature above average returns and below average risks. If we look at our alpha is quite strong relative to both the category and the index, a lower beta. So again, this high return and below average risk is quite important here at SIA Wealth. A positive Sharpe ratio. And we'll look at our captures, in particular the downside capture relative to the market, 33%. So we are in a maximum drawdown of 8.6% since inception. So this is a portfolio that has historically done well in the good times and done really, really well in the bad times. It's also a portfolio that has evolved in terms of our trading technology and improving our approach over time. We're constantly monitoring our trades. We're constantly going through all of our trades, all of our positions, thinking, how can we do better? How can we execute on our rules more effectively? And how can we help to bring even better returns, risk adjusted, for our clients? And so initially, you can see from 2018 through to 2020, we began with the original equity action call, original trading rules, and asset allocation. And over time, we've developed more enhanced sets of rules and more enhanced as well approaches to market conditions. We've implemented dynamic asset allocation strategies, and they started to really pay off as we moved past the end of 2021 through 2022. The portfolio outperformed during the bear market. In 2023, the market caught up a little bit, but since the later part of last year, ZFN has been extremely strong in a bull market relative to the benchmark, and a lot of this is related to the implementation of trading rules that we've brought in, more on tactical trading rules, more on looking at short-term indicators as well as long indicators, enhancing our position stops as well. And even the original system, I've spent a lot of time trying to break the system as well as trying to improve it. And it's been very robust right from the get-go. It's a strong system that continues to evolve and continues to improve, and the results have been bearing that out. Something else to mention about the North American Equity Fund as well is that it is a fund that has tended to do better relative to the benchmark as benchmark returns decrease, or in other words, it's done particularly well in bear markets. It's done well relative to its benchmark in bull markets, but particularly well when the benchmark has been negative. This portfolio has tended to outperform quite well pretty much every single month except one. And that's 94% of the time when benchmark returns are negative. The returns on this month have been positive. So it's something that has offered improvement during bear markets, and as well held its own and done quite well during bull market periods as well, particularly this year. Looking at some of our other portfolios, we'll look at the BMO SIA focused Canadian equity fund. This is ZFC on Toronto for the ETF class. And we'll note we had a strong month in May, first percentile among Canadian equity funds, beat the category, beat the index, and year to date, it's top quartile, 17th percentile against its peers, again beating the category. And it has struggled a bit over the longer term, but it is a portfolio that we're continuing to work with, continuing to work on ways to improve performance. And the last month has suggested that some of that might be starting to come together, and we're continuing to work to improve this. Looking at the volatility metrics for ZFC, we show that the risk versus category is very low, and so that's something that is a hallmark of SIA Wealth Management, has been our risk management, and certainly that has continued with this portfolio, the focused Canadian portfolio, from inception, and it has been a little bit below category on the return side, but as noted, it has been improving this year so far. Alpha has still been better than category, and standard deviation is significantly lower than category and index. And if we look down at the lower part here, again, downside capture is quite low relative to the category and index, and a low maximum drawdown compared to the category and the index. Moving now to the BMO Tactical Global Equity ETF Fund. This is a fund that invests in a basket of 5 large cap stocks, as well as broad-based index ETFs, as well as sector ETFs. And year to date, this one is in the tactical balanced category. And this one we can see has been a consistently strong performer, first percentile on the month, first percentile year to date, first percentile 1 year, second percentile 3 year, fifth percentile 5 year, consistently outperforming relative to its category and to the benchmark index. And if we look at this one, it is high return relative to the category and a little bit above average risk. But at the same time, we look at the metrics, alpha is significantly stronger than its category. The Sharpe ratio significantly stronger than the category as well. And the downside capture is still quite low relative to the category. And again, maximum drawdown, once again, significantly smaller than the category and the index. The BMO Tactical Global Asset Allocation ETF Fund has all of the positions in the Global Equity Fund, plus a 40% fixed income sleeve as well. So it's 60% equities, 40% fixed income. And this has also been quite strong, consistently 1 month, 3 month, year to date, 1 year, all top decile, 3 years, just outside of top decile as well. So this is another fund that has consistently performed well relative to its peers in the tactical balanced category. And looking again here, it is above average return and below average risk relative to the category. That's over 3 years. We have alpha significantly better than category. We also have a lower standard deviation than the category in the index, a smaller downside capture relative to the category, and once again, a smaller maximum drawdown as well relative to both its category and its index. So as we can see, the May 2024 as well as 2024 year to date we've seen some very strong performance from SIA Wealth Managed Funds, and we continue to work on ways to improve and deliver positive results for clients. Thank you very much for joining us, and we look forward to meeting with you again next month. Have a great day.